Okay, and with that, let's begin. So good morning again. Welcome to our FrontierView webinar on the Western Europe Outlook for 2021. My name is Mark McNamee. I am the Director for Europe, overseeing Western Europe and Central and Eastern Europe research here at FrontierView, and I'll be today's moderator. Before we get started, I realize that some of you may potentially be new to FrontierView, so we will just take 2 quick minutes to provide you with a very quick overview of the firm and how we work with executives at major multinationals. So FrontierView is a market intelligence and consulting firm that provides tailored solutions to drive growth to multinational companies across the B2B, healthcare, consumer, and technology sectors. Excuse me. Continuous research and insights and custom solutions provide clients with timely, actionable insights to adapt and win in changing markets. The company is headquartered in Washington, D.C., with offices in New York, London, and Singapore. As you can see here, we have unveiled our FrontierView mobile app, which our clients have found to be very useful as a sort of daily reminder to receive reports, forecasts, and commentary on the latest news analysis, all at the availability of your fingertips on your mobile phone each day. Our dedicated teams serve as advisors to more than 300 multinational firms, delivering the market and industry knowledge they need to succeed at all points in the business cycle. For more information, of course, please visit our website at www.frontierview.com. And with that brief overview, it's now my pleasure to introduce our panelists for the webinar, Athanasia Kokinogianni. Athanasia is the lead analyst for Western Europe at Dr. Frontier. She has been with us for 4.5 years and previously worked as an economic advisor for the European Commission. In addition, I, Mark McNamee, will be providing a brief global outlook to introduce things. Looking at the agenda.
Hello, everyone.
For today, we'll get started here in a second. So just looking at the structure, we'll cover a few things, right? So you can see here in terms of the global and EMEA context, COVID, recovery pace, and then some industries. Naturally touching on Brexit as well, followed by a Q&A session. If you have any questions throughout, please send them, as mentioned, to the host at FrontierView Webinars via the GoToWebinar messenger by clicking on the Q&A box on the right-hand side of your screen, and we will do our best to ensure that they are addressed in the Q&A period. So with that said, let us get started by sharing our global recovery assumptions, beginning from the vaccination narrative. Course. So very quickly, when you look at sort of our base case assumptions regarding the outlook for COVID at a global level, of course, Athanasia will go into more depth within the region and even by each country. But you get an idea here in terms of our rationale for developing the base case scenario for the entire planet in terms of recovering out of COVID. So in terms of virus evolutions, our base case assumption is that new variants will continue to arise in the coming months, and existing variants, the UK strain, the Brazil strain, the South African strain, which are considerably more transmissible, as an example, will continue to flourish not only in the countries where they exist, but in other countries as well. So impacting restrictions outlooks, for example, and the pace of recovery, therefore, in all of these countries. That said, we still fundamentally believe that the vaccination campaigns will be sort of aggressive and successful enough in order to, under our base case assumption, avoid a situation where the predominant global strain would be a virus that is not sort of covered by the existing vaccines or boosters and various sort of edits to the existing vaccines. So I, of course, won't go over every detail here, but you get an idea of sort of our fundamental conceptions and presumptions about the global outlook regarding the epidemiological situation. On a country-by-country basis, it's also important to note that certain countries are definitely viewing the virus in a very different way, whether that be for cultural or political or economic reasons. But there is a clearly different strategy broken down by various countries in terms of their tolerance or reduction or simply ambition to eliminate the virus entirely in order to bring the COVID situation under control. Athanasi will go into more depth of what this means, but Western European countries, broadly speaking, typically fall under the virus reduction or elimination strategy. Generally speaking, Eastern European countries and a few others fall closer on this spectrum towards the virus tolerance strategy. So you can get an idea here looking at the map in terms of virus reduction is the general sort of philosophy of how the United States, Canada, but all the Western European countries were focusing on in terms of how they politically and economically are approaching the virus. The good news is we've seen positive developments with the countries that have seen some vaccinations in terms of reducing transmission and hospitalizations and new cases. In the UK in particular, Israel as well, and obviously the expectation is that we'll see similar trends that we've seen in the UK since the beginning of the year, starting to accelerate in other Western European countries now going forward. That said, unfortunately, considerable economic damage was done within Western Europe, which suffered disproportionately compared to most of the world over the course of 2020 and only rebounding relatively mildly, particularly after such a low base of 2020. So a relatively mild recovery in 2021. This has to do primarily with the fact that, of course, Western European markets were more exposed than most of these other regional emerging market areas, which are far less, those markets are far less exposed to the services sector than the Western European market is. So that impacted it considerably more. The United States also obviously very highly impacted, but had the largest stimulus package in the world, really by far. So that helped sort of nullify some of the economic pain. Plus tourism, not just any services sector, but specifically tourism and the high reliance of Southern European countries, of course, hurt Western European growth this year as well. So we're looking at the rebound. Unfortunately, Western Europe came into the crisis in a relatively weak position of growth across the board, with even some lingering consequences of the global financial crisis still evident across the region, and therefore, for the reasons I mentioned as well, in terms of the sectoral vulnerability of the Western European economy, the revival out of COVID is going to be considerably lower as well going forward. That said, naturally, in absolute terms, this is a region that cannot be avoided naturally. So, of course, slower growth, slower recovery, nonetheless, in absolute terms, a very large and in the future continuing to be an appealing market at the global level. You get an idea here of how we've broken down things based upon our assessments of the epidemiological situation, the vaccination campaign, the sectoral vulnerabilities of various countries. Returning back to 2019 levels of growth, you can see that, for example, Germany, of the major countries in Western Europe, is in the lead in that regard. UK a bit behind, some more pressures from Brexit kind of keeping it a little bit behind, and then a lot of the other countries, particularly the tourism-dependent countries in Southern Europe, recovering even later than that, unfortunately. When you're talking about real local currency unit in consumer spending specifically, so not GDP, but consumer spending in local currency, we can see here that a number of countries kind of move up. In particular, as you can see, in 2023, a country like France actually starts to recover thanks to a little bit of a stronger euro. So you can see some movements depending upon, obviously, currency impact, and more B2C oriented companies will see a little bit more of a resilient recovery thanks to those factors. When we talk about the impact of COVID and essentially what was COVID specific in terms of altering these sectors and business operations and execution, and what is more structural and that is going to be existing now going forward in 3, 5, 10 years as a result of COVID. So a number of things are important to take into account. We've highlighted them here for you, which would be particularly relevant for Western Europe. If you look at COVID-related decline, you can see holiday tourism and personal travel. We do expect that to come back at a structural level to start to improve in the coming years. So that was obviously a severe, more temporary decline. Now, temporary can be a couple of years in the case of tourism, but nonetheless, we do expect over the coming years to start to improve. However, say something like business travel is definitely facing structural decline. Companies have found, of course, that they can manage operations and perform quite well while saving the cost of actually traveling within markets or around the world, and instead can do a lot of that digitally through Zoom calls and other various methods. So we're actually, that is something likely to stay with us going forward. Working from home, also a COVID-related increase. Structurally, though, that will probably persist as well to an extent, right? So we anticipate that most people would be coming back to offices naturally, but over time, but in the temporary impact, of course, within Western Europe in particular, we've seen, of course, very high levels of working from home in 2020 and in 2021 as well. So with that, I think we can move into the specifics of the COVID impact within Western Europe. So I will now hand it off to Athanasia. Athanasia, please confirm that you have control of the slides.
Yes, Mark, thank you very much for setting the global context for Western Europe. Confirm with me whether you can see the rest of the deck currently.
Yes, and it's in presentation mode. It's good.
Perfect. So yes, thank you very much for setting the global context for Western Europe. In this section, so the Western Europe section, I will try to shed some light on the recovery assumptions that we have, particularly for Western Europe. So I will first share our forecasts for GDP growth in particular and consumer spending, and I will try to give, let's say, a better understanding on what we base off our forecasts and how we determine, let's say, the recovery pace, because the recovery pace, it's not let's say uniform across Western Europe. There is a big divergence, especially when you compare the North to South Europe. And we are taking into consideration several factors like lockdown measures, how stringent they are, their duration, but what happens with vaccination campaigns, and where we see progress. That, of course, will mean faster recovery for Western Europe. But last, we are also looking at structural factors like dependence of the economy, of each economy, on tourism or on manufacturing, but also cultural factors that play a role. In the next, after the recovery pace section, we will go a level deeper and speak about industry trends. We will look at it from the business to consumers angle, so B2C, B2B, but also B2G. And last, we will spend only a couple of minutes to give a high-level update on Brexit. And we will leave also some time for anyone who is attending this webinar to ask a question live. I will start with the key takeaways from today's presentation. And also, I would like to give an update compared to the previous webinar we had for Western Europe. So what are the changes we have highlighted since September than we had the last Western Europe webinar? So what we can share in terms of the narrative is that we have become a bit more pessimistic when it comes to the pace of the recovery taking place in the first half of this year. And why is that? This is undeniably related to the presence of the new COVID-19 variant that was first observed in the UK and is already spread out across Western Europe. 90% of the new cases in Western Europe are currently associated with the new UK COVID-19 variant. And of course, this means tighter restrictions across Western Europe in March. This is something that we expected back in January, but we will be honest saying that back in October, it wasn't, let's say, the main assumption that we will see such a full-blown new COVID-19 wave during winter. The second, let's say, change that we highlight compared to the previous webinar that we had back in September is that the vaccine is out. So the COVID-19 vaccine is out. However, we have not seen a substantial progress as we would have wanted to see, especially amongst EU countries. Within Western Europe, the UK is leading the vaccination campaign there. But in the EU, across the EU, we are seeing notable delays when it comes to EU vaccine supply and procurement. And we think going forward that there will be some alleviation of those pressures around April of this year. Overall, as you would imagine, economic levels should not return to pre-COVID levels in 2021. So 2021 will not be a period when we will see full return to pre-COVID levels, so full recovery. But of course, there will be some rebound, especially during summertime, where we expect relaxation of restrictions across Western Europe. Together with economic levels, we think that we will see a full rebound of tourism by 2023, so not earlier than that. On the positive side of the story, we think that the second half of this year will be a strong phase for Western Europe, strong recovery phase, and the economic rebound will be stronger than thought initially. Why is that? Because during the summer period, our expectation is that new COVID-19 infections will slow. Due to the warmer temperature, thanks to the warmer temperature, but also some immunization effects will be already felt related to the vaccination campaigns in Western Europe. This will allow a relaxation of containment measures, a significant relaxation of containment measures, June, I would say mid-June to end of August. When we are assessing the recovery pace, of course, as I mentioned, in the first half of this year, we expect a slower recovery than thought initially. But this doesn't mean that recovery, let's say, the recovery assumptions are uniformly gloomy. We are seeing significant variation, wild variation from country to country and from segment to segment. Particularly the countries that we expect to recover at a faster pace in Western Europe are currently Germany, which is the market to recover by 2022 back to pre-COVID levels. So the first market to return to pre-COVID levels from Western Europe, followed by the UK. We have become a bit more optimistic on the assumptions for the UK market, for the recovery assumptions of the UK market lately. And that's because we are seeing strong post-lockdown rebounds taking place in the UK, especially judging from the figures recorded in Q3 2020. And also Netherlands, we are seeing that also the Dutch economy is performing better, I would say, than the rest of Western Europe as an aggregate. Looking the region from a sectoral perspective now, we are relatively optimistic about growth in the food, beverage, and tobacco segment. Of course, we will not see double-digit growth as we saw back in March 2020 for this segment, but nevertheless, we are optimistic about consistent, solid growth. I want to explain here, highlight here that we do not include in this segment the food service segment. So this is only related to manufactured food that we expect to record consistent growth, and it's not related to the food service sector that we think will record a slower recovery pace compared to the manufactured food or groceries segment. Also, other opportunity segments that we highlight for Western Europe are pharmaceutical and chemicals as well, consistent growth overall going forward, but also household equipment, everything that has to do with technology equipment, so personal technology equipment, electronics, household electronics. We continue to see momentum of purchases, retail purchases for this segment as well, driven primarily by this home working trend that will continue to be the case throughout 2021 at least. Last but not least, e-commerce, the real winner of all segments, especially in the Q1 2021 lockdown, we have seen again double-digit growth of retail e-commerce sales across Western Europe, driven primarily by the UK, Germany, but also some Southern European countries like Spain, where we're seeing a shift, a structural shift of the retail channel towards online sales. Although we think it's unlikely that those double-digit growth rates are maintain their momentum, we believe that e-commerce sales will still provide solid growth and will remain the dominant sales channel throughout 2021, even though we expect to see relaxation of restrictions in the second half of the year and opening of the retail channel. But on an average, I would say e-commerce will be the dominant channel in 2021 when it comes to retail sales. I can move now to the next, let's say, of the details of the story, of the narrative. First, starting from our expectation about the shape of recovery for Western Europe. As you can see, the graph that we are sharing, the pace of recovery resembles a W, with an upward, let's say, trend, upward inclination. You see that in the W-shaped recovery that we highlight, Q2 2020 was the sharpest recorded dip in the W-shaped recovery, and going forward, its drop is not as significant, is not as steep as the previous one. This will continue to be the case. We might see, it's possible that we will see another wave of COVID-19 around May this year, depending on progress of vaccinations across Western Europe. But what we can say is that also we expect some relaxation across Western Europe during the Easter period, so early April, so Catholic Easter period. But this will be only a temporary relaxation. The permanent relaxation that we can highlight will be towards, as I mentioned, June. So after mid-June, for continental Europe, most likely early July. That's where we position, let's say, that's where we position the stronger recovery pace as well for this year, but also the more permanent relaxation of containment measures. What you can see in the graph that I'm sharing here are assumptions, are GDP growth, so gross domestic product assumptions, percentage year over year. So this is aggregate GDP across largest Western European governments, Western European markets. So Germany is the country to return first, let's say, as I mentioned, to pre-COVID levels. Germany, the real outperformer, returning to pre-COVID levels by 2022. And followed afterwards by France and the United Kingdom. And I would say that France and the United Kingdom record fast to moderate growth, especially for the UK, faster growth assumption there. However, when you're looking at the South European portfolio, particularly Italy, Spain, you would see Greece there featured if we have included it in the slide. Unfortunately, we are seeing that in South Europe, although South Europe was impacted the most or faced the most severe decline in economic growth in 2020, the recovery pace in 2021 is not equally strong. And this means that South Europe will lag compared to Northern Europe, and there will be a clear bifurcation of North compared to the South when you are looking the portfolio, the Western European portfolio, as an aggregate. I would like now to move into the assumptions for the recovery pace. As I mentioned in the beginning of the presentation, we'll look at it from the lockdown perspective, from the vaccination campaign perspective, but also we will take into consideration other structural factors. Starting with the pace of the recovery by markets and which markets will return to pre-COVID levels first. You can see that Germany is the first market to return to pre-COVID levels in 2022. So above the dashed line is where you see, let's say, the line of each country. It's when those countries will return first to pre-COVID levels. So the first that reaches, let's say, this dashed line is Germany, and this is because we expect Germany to return to pre-COVID levels by 2022. So late 2021, early 2022 for Germany. Moving towards the rest of the portfolio, you see that the UK goes to pre-COVID levels by 2023, and the rest of the portfolio follows suit, such as France, Spain, and Italy. Starting with the assumptions now. So where we base our recovery assumptions off. So first, what we're looking at is the lockdown stringency and time frame expectations. So as you can see, there is variation of stringency from market to market. Currently, the most stringent and the most strict lockdown is being implemented in the UK, especially in Q1. We are seeing one of the tightest lockdowns. And moving to the rest of the countries, we are seeing Italy equally a bit less, but a very strict lockdown there. So and then followed by Greece, Germany, Netherlands, and what you can see, it's clear that amongst the Nordic region, you are seeing laxer restrictions. When it comes to our future expectations for lockdowns, as I mentioned, we expect tight lockdown measures until at least the end of March. Some temporary relaxation around April, so the Catholic Easter period, followed potentially by further, let's say, tightening of restrictions around May, depending on progress of vaccinations, and a more permanent, let's say, relaxation of restrictions around mid-June. You can see also from the graph that we have created, we try to visualize and illustrate our lockdown time frame expectations. As you can see, a peak of infections, followed also by peak of restrictions across Western Europe around March. Some temporary relaxation, as you can see here, the drop of the stringency index around the Easter period or early April. Followed by some potential, let's say, new wave, a milder, much milder, but still a new wave around mid to end of May, and some more permanent relaxation after mid-June. Of course, the other side of the story, connected with the lockdown restrictions, lockdown containment measures, is what happens with progress in vaccination campaigns across Western Europe. What we can say overall is that we feel that vaccinations will not have a meaningful effect on the economy or on the recovery pace before June 2021. And of course there are variations. We see that the UK is leading vaccination campaigns there due to the fact that there is ongoing vaccine availability, especially from the AstraZeneca vaccine producer. But the UK government is more committed to vaccinate people over 60, so sensitive groups, at the soonest possible, and this would be for the UK by May. So by May 2021, we expect to see full vaccination of sensitive groups in the UK. Total population vaccination will come at a later point, at around end of September for the UK. However, the fact that the UK government will have vaccinated people over 60 by May will allow a permanent and more permanent relaxation of restrictions at around June. So in order for you to understand how we think through this, we take into consideration the May timeframe for vaccination of people over 60, and we add roughly 2 weeks to 1 month for immunity development after vaccination. So around June 2021, to repeat, that's when we think that there will be some permanent relaxation of restrictions, particularly for the UK, setting the standard, let's say, for the rest of Western Europe. When we're looking at the rest of more continental European markets, there are more delays there when it comes especially to vaccine supply. And of course, this means that the rollout, vaccine rollout is slower there, especially in Germany. The rest of the countries, so France, Italy, Spain, and Greece, we've seen faster progress than in Germany, and we expect some more permanent relaxation of restrictions for those markets, so France, Italy, Spain, and Greece, at around July 2021. So this means, if I can summarize, looking from lockdown restrictions and vaccination rates, this means that it's unlikely that we will see the recovery taking, let's say, picking up before the second half of this year. And it's clear from looking at especially the lockdown measures and judging from the dependency on tourism of South to Europe, that there is a clear, as I mentioned, bifurcation of the northern countries compared to South European markets. So what we can see also from the Europe Recovery Index that we have constructed here in-house at FrontierView, we see that Nordic markets are less exposed to COVID-19 and are expected to recover at a faster pace. You are seeing that larger European markets are, especially when it comes to the UK, let's say, will record a moderate pace of recovery and are moderately exposed to COVID-19 compared to South European markets like France, Greece, Italy, Portugal, and Spain. Those markets are the most exposed to COVID-19 due to a larger dependency on tourism. Of course, the vaccination assumptions, lockdown assumptions, and dependency on tourism in markets are determining also the recovery pace of consumer spending across Western Europe. What we can see when it comes to the recovery pace of consumer spending in Western Europe is that overall we will see the strongest pace, so strongest year-on-year change of consumer spending in 2021 in Germany. So in line with the faster recovery assumption there, and especially in the Nordic portfolio of Western Europe. If you look to the right, you can see that this is backed up, this assumption about the Northern European portfolio outpacing, let's say, in terms of the recovery. This is backed up by household saving rate figures that have notably increased in Northern Europe. So you can see Netherlands, UK, Germany, Belgium, record high household savings rates, especially in Q2 2020, but I would say overall. And what does this mean? It means that consumer spending in those countries of Northern Europe has been more resilient than South Europe. And it means that in the second half of the year, when we expect stronger mobility and laxer restrictions, it means that there will be some pent-up consumer demand, translating into stronger purchases of premium goods in those markets. So in other words, this resilience in consumer spending will result in stronger momentum, recovery momentum for countries of the north compared to the south. When we are looking at the recovery from an employment perspective, now this narrative of south vs north is clearly confirmed. So overall, Spain, Portugal, Italy, France, biggest declines in change in employment. So this is the inverse, I could say, of unemployment. So change in employment, biggest declines in employment in South Europe. And employment expectations, you can see to the right. So that's employment expectation from employees. So that's not from firms. Employment expectations are more pessimistic where lockdown measures are more stringent overall. Of course, when we go an even deeper level, in order to understand the impact on employment, you can see that variations exist there as well. So what we can definitely highlight is that real estate activities, information and communication, and public sector activities are definitely opportunity segments when it comes to employment creation in 2021 compared to arts and entertainment, other business services apart from legal and insurance services, but also wholesale, retail, transport, accommodation, and food service activities are, I would say, the losers when you compare performance, sectoral performance, segment performance. Of course, what is the main determinant of the recovery pace is the fiscal support that is being provided and introduced by Western European markets. What is very important to highlight here is the governments that have introduced the strongest direct spending measures. What is direct spending? It's tax cuts, handouts, subsidies, and other direct spending. So direct spending is highlighted in the light blue bar here. So you see that the strongest direct spending impulse has been introduced so far by the UK, followed by Greece and Germany. So it's not a coincidence that you see the UK and Germany, the first markets to recover to pre-COVID levels. Is definitely related to a strong, robust stimulus that we have seen in those markets. When we are looking at the key measures that have been introduced in those markets, you see that amongst them is spending on healthcare, particularly on hospitals and hospital equipment. Also procurement of vaccines falls there as well, and also wage support and employment transfers. I note here, we know that the UK government has recently confirmed that the furlough scheme is extended until September 2021. We think that there could be further extension potentially, depending on the impact of COVID on the economy, particularly on the tourism sector that we're more pessimistic about. So there could be further extension until early 2022. However, going forwards, especially 2022 and 2023, those are the years where we should expect a reversal of some of those fiscal measures. What does it mean? It means that we should expect an increase in taxes, especially in South Europe. So France, Italy, Spain, in particular Greece as well, and in Germany in particular, we have seen already reversal of the VAT tax January this year. So the reversal will take place, I would say, in an aggregate, most likely in 2022 for the countries not as much impacted, but 2023 for markets that are more dependent on tourism like Spain, Italy, and Greece. Looking at the inflation assumptions now behind all this, we are receiving lots of questions from firms we work with, whether there will be a big, let's say, uptick in inflation that could translate into extremely high costs for their businesses. We are more optimistic about the inflation narrative, I would say the inflation trend. What we can say is that we expect moderate inflation amongst Western Europe, all Western European countries. And why is that? Because first of all, energy prices should remain under control. We expect only a small increase in oil prices as demand and supply remains balanced. The second factor that determines this moderate inflation environment is the timid consumer spending recovery that we expect to see. As I highlighted, we don't think that there will be a full return to pre-COVID levels in 2021. So this means that the consumer spending or demand pull inflation momentum will not be as strong to result into big inflation movements. And the third factor that determines this moderate inflation environment is the ongoing appreciation of currencies that we are seeing. So particularly when we are assessing the performance of the euro to the dollar, as of today, it's at 0.84. And going forward, we expect further appreciation of the currency because overall the euro remains undervalued. Going forward, of course, in the second half of the year, some normalization in the economy will aid expectations for the euro as well. And this will be combined with some stabilization that we expect this year of the US dollar. I would like now to move to the last section of today's webinar, so industry trends, in order to understand a bit deeper the specifics of the performance of countries within segments. As a summary of what we've shared so far regarding our recovery expectations within Western Europe, I would like to highlight this market prioritization. So the first market where firms will find an opportunity in 2021 is Germany. Germany is the market to record the faster GDP rate as percentage year on year in 2021, and is the first to return to pre-COVID levels by early 2022. It is the market to offer one of the strongest fiscal stimulus globally, and we expect immunization of sensitive groups by June, July in this market. Germany is followed by the UK, GDP of at around 3.5% expected this year, return to pre-COVID levels by early 2023, very strong fiscal stimulus there as well, even stronger than in Germany, and a fast vaccination campaign compared to the rest of Western Europe. Watch out for performance in South Europe, especially Spain. I would say Spain and Portugal. Those are the markets that would be risk geographies for 2021. Let's have a better understanding of what happens in the retail environment now. Looking at the different segments' performance, the real winners there highlighted in blue, as you can see in the table featured, is online retail sales. Definitely the strongest momentum in online sales is recorded in the UK and will continue to be the case because the UK offers, let's say, the most prepared and the strongest infrastructure, online infrastructure across Western Europe. So this will continue to be the case. We are seeing also improvements in the online sale in Germany, markets where the online channel was not the traditional one. When you look at other growth segments, definitely food and beverages, tobacco, you see solid growth there. But also the chemical segment, household equipment, computers, peripherals, and electronics. Risk segments, unfortunately, will continue to be textiles, clothing, and footwear. Looking now at the industrial picture, unfortunately, we have not been seeing the industrial space picking up. We have been seeing ongoing weak performance when it comes to intermediate goods, goods used for production of other goods. Energy in particular, underperformance in this segment as well, and capital goods, goods like machinery. For instance. However, and I would like to really point this out, the fact that we are seeing ongoing or increasing demand for consumer goods, whether this is durable or non-durable consumer goods, will drive improvements also in the industrial segment as well, stemming from improvements in manufacturing. So although we've seen tight restrictions across Western European markets, we see consistent improvements in industrial and manufacturing production, in Western Europe, month on month and year on year, across all Western European governments. And this shows that towards the second half of the year, we will see upticks also in the industrial space, driven by stronger demand for manufactured consumer goods. Some other B2B opportunities that are clearly highlighted is everything that has to do with green technology, sustainability, and environmental friendly construction materials, clean solutions. All those segments are high growth segments supported by favorable regulation from the European Green Deal. But also, I would like to highlight that when it comes to the automotive segment, we have been seeing from March and onwards improvements in automotive sales. Of course, this is statistical as well compared to a weak 2020. However, especially the electric vehicle segment is projected to record strong growth going forward. Last but not least, healthcare segment, a segment where we project continued investment from government, especially towards digital services and digitalization. And as you can see to the very right of this graph, most of countries are increasing their healthcare spending as of total spending in order to cope with the COVID-19. But also they realize that a structural change is necessary also in the economic model, and everything shifts towards stronger healthcare investment. I would like to leave with you also some more specific slides about the consumer and retail environment. Of course, we can have follow-up sessions with, or we can address follow-up questions. But I will leave this to you, this information to you. We go a level deeper into consumer and retail, and I would like to spend the last 2 minutes on a very quick Brexit update, and then leave a couple of minutes for questions. So Brexit still remains a concern, although we've seen, we've had the agreement as expected by FrontierView, the Brexit agreement about a free trade agreement between the EU and the UK. However, Brexit still disrupted companies, as we had highlighted. We saw supply chain bottlenecks and logistical issues throughout, especially the Christmas period and in January 2021. When it comes to trade between the UK and the EU, trade volumes were reduced substantially, of course, due to COVID as well, but we think that Brexit played an instrumental role in declines of trade or weakness of trade volumes between the UK and the EU. What we expect to see going forward is some normalization of this trend in the second half of the year, when we expect some resumption in mobility levels and relaxation in lockdown restrictions. But overall, we think that firms should continue to monitor Brexit landscape changes, because regulatory shifts are probable going forwards. As I say, Brexit opens the door for potential future regulatory divergence between the EU and the UK. And going forward, the first milestone that we need to look at is the equivalence, of course, of financial services between the EU and between the UK and the EU. We think that sometime in 2022, even 2023, this equivalence will be given, but not full equivalence. So we will have a state, as we've seen in Japan, for instance, or in other countries where there isn't full equivalence, but some equivalence will be eventually given. I leave also to you some suggested actions that we suggest amongst our client base when it comes to how to tackle Brexit challenges, and those are broken down by segment as well. I know that we do have 3 minutes left, so I want to pass it over to Mark to see if there are any questions from the attendants.
Perfect. Yes. Thank you very much for that, Athanasia. Very insightful presentation, of course. As Athanasia mentioned, the floor is open for questions. If you have any, just as a quick reminder, send them to FrontierView webinars via the GoToWebinar messenger by clicking on the Q&A box on the right-hand side of the screen. So we do have 2 questions that have come in. The first one, Athanasia, relates to Spain's recovery specifically. So why is the recovery in Spain more delayed than most of the region? So expected only in 2028.
Yeah, so as we highlighted, there is a clear bifurcation of northern to south, particularly for Spain. So the Spanish market is very dependent on tourism. So as we mentioned, tourism will not return to pre-COVID levels before 2023. And of course, this greatly impacts the recovery pace or delays the recovery pace for Spain. Another important factor that plays a role in the late recovery of Spain is the low direct fiscal stimulus that we are seeing there. So less than 5% of direct fiscal stimulus is allocated from the Spanish government there. And this will mean economic weakness, but also consumer spending weakness, at least in the medium term. Those would be, let's say, the main factors that play this role and determine the slow recovery for Spain.
Okay, great. Thanks for that. Another question, a rather general question here. Athanasia, what happens to the Western Europe economy in general once governments remove fiscal support? So are you concerned that once that, I suppose the question here is mostly around the concerns you have towards certain markets once a lot of that government support is removed?
Right. So I don't expect a decline, let's say, in economic activity once in 2022 or 2023 Western European governments remove some of the fiscal stimulus measures that they had introduced. By then, we think that there will be some normalization in mobility, and we will have seen a natural uptick in economic levels. And this will allow governments to gradually remove the fiscal support that they had already introduced in 2020. So I don't foresee a big impact. And we think that it will take some time, especially for South Europe, that we will see full removal of fiscal measures, especially for South Europe.
Right. Okay, great. We don't have any other questions that have come in, so we're finishing perfectly on time here. So thank you everyone for the questions as well as your attendance today. If you'd like us to follow up with any other questions that you may have asked, of course, please let us know. As mentioned earlier, you will be receiving this deck, so we'll be sending that along to all the attendees, so no worries there. And of course, reach out to your client relationship manager should you have any further questions or would like to observe any additional content on our website. Again, thank you everyone for your time and for joining us, and we look forward to speaking with you again soon. As a reminder, we have our Central and Eastern Europe webinar next week, so hopefully some of you can be attending that or other members of your team who cover the region. So with that, thank you for your time. Have a good one.